Hello, folks. This is Huskins, your Forex mentor. I wanted to share with you the trading plan which I have for the retail sales out of Australia, which will be released at 9:30 p.m. Eastern Standard Time. Now, since it's released during the Japanese session, and I'm not a big fan of trading during the Japanese session, unless and until it's a major news release, such as the employment change or the interest rate announcements from Australia, uh, I am going to skip on trading this particular event during the Japanese session. Instead, what I do is I will trade that same event during the European session. So how would I go about doing that? Is that I'm not going to be bothered with what the markets do at 9:30. I just observe the pre-release price compared and compare it with the 1:59 a.m. price. That is just the beginning of the European session. And if it has gone up, I'm going to assume that the Europeans are going to continue that momentum. If it has gone down, I'm going to assume that they're going to continue this momentum. This kind of a trade release is it's not consistent in the sense that sometimes the retail sales continues to go up during Japanese sessions. Sometimes it turns around. So I'm not going to be bothered with what it does during the Japanese session. I'll just look at the end result. I'll look at from 9:30 right up till the beginning of the European session. What did you do, Australian US dollar? And if Australian US dollar went up, buy. If it went down, sell. Let me give you a few examples so that it'll become very clear. This was on the 30th of uh, May. You can make out that I'm already very tired. I've had a long day, but here it is that the retail sales turned out to be worse than expected. The market went down and it stayed down lower than the pre-release price. And what do I do in that case? I wait for the Europeans to open up and sell exactly at 2 a.m. And what does the price do? The price does exactly what I expect it to. Let's look at another date. This is the release date is the 2nd of April. Now we have the news out here. I'm not even sure what the news was, but all I can say is that the the price at 2 a.m. was lower than the price at 9:30 when the previous news was announced. That means that I need to sell into and expect the Europeans to carry on what the Japanese session told us, and make tons of money this way. Um, let's look at it in a previous example. News turns out to be better than expected. Let's zoom right in. Okay, now why don't I trade my the European sorry, the Japanese session? Because if I get in at about this price, what you can see that the market does not do much. It moves from here from 27 to about 39, about 10, 12 pips. So there isn't much of meat left during the Japanese session for me to take advantage of. Um, and now But once the Europeans come about, you can see the kind of movement which takes place from here, which is 1.0142 right up till 94, more than about 50 pips. So that's something which I actually like. I like the European session because the moves are better and they're cleaner, and that's what I want to take advantage of. And I hope you've understood what I've tried to explain. If not, please post your comments or send me an email. Thank you.